Hello traders, and welcome to a video that's going to bring you a lot of alpha. Speaking of alpha, if you want to get a big market advantage, go check out my premium Discord that just launched about 2-3 months ago. We are doing really well in the Discord, and if you want to be a part of the journey, just join for 15 bucks a month. Okay, so today we're going to be talking about an indicator that I have talked about before, but I feel like I didn't fully appreciate or fully understand it. That is this indicator right here from OKX. So what we're going to be looking at is the BTC top trader average margin used. This is the top traders on OKX by volume. And if we go here and click this icon, we can get all this data here that I prepared. Now, what this is basically showing you guys, let me just hover over 8%. I'm going to show you guys a bit of this, and then we're going to implement it. When it says long position percent of margin or short position percent of margin, basically what that's saying is what percent of these traders' futures accounts are being used at risk. Okay? For those that don't know, margin is the amount of money you have at risk. If you have, let's say, 20% margin at risk, that's a lot, but that's just kind of how it works. Okay? So basically, the way that this operates is whenever you see a situation, they will be wrecked. That's what I prepared. Whenever you see a situation where one side is using just a crazy amount of risk, this is what tends to happen. Look right here. This is Bitcoin on the daily chart. It's taking data at 12 p.m. Eastern every single day on Bitcoin. Now watch this. You can see that longs are taking a lot of risk and shorts really weren't. It was a pretty large divide. This is what exactly had happened. So the data was taken exactly at 12 o'clock. Okay, so to show you guys where that was, the date was the 18th of May, so that would have been right. Yeah, that would have been right here. So if you look at this chart right here, that's what I was indicating. This data was taken at the close of this candle. So right here is when you would have gotten access to that information and seen that just an insane amount of people were taking risk on their longs. The long percent was actually, the long percent of average margin used got up to almost 12%, which is one of the highest points on the chart it had. The other time where it was a bit higher, but also shorts were taking a lot of risk, was May 15th as well. So yeah, you can see longs taking a lot of risk, and it did not go well for them because price just tanked. Another time that they were taking a lot of risk was 5:15, 12 o'clock, which was at the market top, and then price killed them all again. This indicator is weirdly very prophetic. It's prophetic. It's very good. Basically, this indicator, it's essentially your squeeze indicator. It's going to tell you how many traders are likely to get squeezed based on how much risk is being taken in the market. Okay, let's move on. So, yep, you can see that one there. Here's another situation where for 3 consecutive candles on the daily chart, shorts were taking a lot of risk. You can see that the average margin used is over 12%. I think it was like 14% at one point. This means that on average, the largest short positions on OKX are taking just stupid amounts of risk. It didn't go too well for those shorts. This is the exact time that Bitcoin was trading at and the prices that Bitcoin was trading at when you can see that the average margin was very high. It did not go well for them. Price just went up and burned them all. So essentially what we're seeing here is, I wouldn't really call this a directional indicator. I would call this more of a squeeze indicator. What I mean by that is more on the lines of volatility. If you see that shorts are taking a lot of risk, don't be surprised if price goes up and then just skyrockets up on a lot of wicks, stuff like this, and just burns a lot of shorts, one after the other. But if you see a situation like this where longs are taking a lot of risk, well, don't be surprised when this happens. When price goes down and on a lot of volatility, because this is really going to forecast volatility in one direction due to how much money is at risk from the largest traders on OKX, as you can see right there. Final example on Bitcoin, then we're going to be looking at some altcoins. I'm going to try to keep this video under 7 minutes. Look here. This is a much shorter time frame. This is the 1 hour, but you can see that throughout this time, longs were taking a lot more risk. The average margin used for longs was quite high. The average margin used for shorts wasn't that high. So I boxed off that area right there to show you guys. Now look at price. This is the same exact time. You can see when longs were taking all of that risk. Look at the way the price moved. Do you guys see this? The way that price just kept on like dipping like crazy and then coming right back up, that was happening very, very likely, if not actually probably certainly, this was happening because of how much risk was being taken by the longs. The more over leveraged that long traders are, the more the price is going to wick down and liquidate or stop them out when they get forced to sell or panic sell. So you can see that's what happened. Then you can see a shift in sentiment where shorts began to take a lot more risk. That's why you see the red much higher than the green. That shift in sentiment happened at the market bottom. So as price began to run up right here on the 2nd of this month of June, that's when it began to happen. So right here, I can go a little bit more granular on the 5 minute. Right here, the shorts began to take a lot more risk. And then what happened? The way the price moved changed. It went to hunting longs like this. And then you begin to see a bunch of just wild, I mean, yeah, price does dip down, but it didn't really last long. Really, what was happening is shorts were just getting burned, and shorts will probably continue to get burned, as you can see there. So I really like using this indicator for just finding who's going to get squeezed. Okay? Now let's go look at Ethereum. This one I had to show because it was so wild. Almost 17% of average margin used. That's wild for very large traders, because remember, this data is coming from top traders, which means top traders by volume, meaning very large sizes. A lot of people were taking risk on what was that, April 21st. Look what happened. April 21st was right here. This data was collected at 12 o'clock, which was a little bit after that candle. That arrow that I'm pointing to. That white arrow points to exactly the time when this data was recorded. Now, you can see this much risk with the longs. It did not go well for them. Price dipped down and killed a lot of them on a 4% down move that happened in over an hour or two. Price just fell a lot. This probably happened because of how much risk these traders were taking. And you can see that a lot of them just continued to take a lot of risk. As you can see, the average margin for longs was quite high, and you began to see more and more shakeouts occur of the longs. So I really find that this is a very good indicator for finding who's about to get slaughtered. Is it going to be longs or shorts, essentially? Let's look at Litecoin, because that one's had a wild run. The short average margin used got to about 10% for 3 consecutive 1-hour candles, as you can see right there. Conveniently, here is what was happening to price at the same time. This was right before the squeeze. So if you look at my time frame right here, this data was taken between 5 a.m. and 8 a.m. That's when there was just a lot of risk in the shorts. If you look at the time frame of the chart here on the 1st, where I boxed off price in consolidation, that's right before price began squeezing out all the shorts. And do you see that large volume spike right there on OKX? If you don't see it, I'm gonna show it to you. This was really interesting. So there was an indication that a lot of shorts were at risk right here. Look just how much volume this is, $30 million in 5 minutes. $30 million worth of trading and buying in 5 minutes. Then it happened again right here with another squeeze with 20 million. So these longs were getting slaughtered. How would we ever know that they're going to get slaughtered? Well, look at this. Look how much risk they're taking. And then look how much risk the longs were taking later at the market top. And then price began to burn them there. It's just a very helpful indicator for finding this. This is a bit more of an extra example, but I wanted to show it because these longs got slaughtered as well. This was May 1st. 5-1B May 1st. May 1st, this data was collected, where was it? This data was collected, May 1st at 12 o'clock, and you can see price was in a very strong downtrend. And for some reason, the average margin used skyrocketed, meaning that a lot more very large traders were taking risk in their long positions, and then price began to cascade on very heavy selling volume. So it really wasn't a good idea for a lot of these traders to take a lot more risk, but they did. And then you can see, it's kind of sad here, but do you see the very large reduction in long position average margin used? It went from an average of about 10% down to like 4.5. That's probably because they got liquidated. That or they took a very large loss. Yeah. Or they added more money to their account, but I'd say more likely based on the volume that I saw, I think it's more likely that these guys got slaughtered on DOT. I think that the best example by far is probably just Litecoin. Like, this is such a clear example, just how much risk these shorts were taking, and then boom, volume spike, tons of buying, they all get killed. Really, really cool indicator. I'm going to be sharing this indicator in the link below. Completely free. You can use it however you want. When you get to this page, you just go here again. Don't forget to click the coin that you want to look at. They do not have many coins. I hope that they add more so I can get more data on risk. But this is the only indicator that I have on a centralized exchange that's like legit showing me data that I'm not supposed to be seeing. You know, traders aren't supposed to have access to how much actual risk other people are taking. But like, this is just so helpful. You can see all this data when the shorts were taking a lot of risk, and this is when Bitcoin was pumping today. And then the longs began to take a little bit more risk. If we look at, it's nothing too extreme right now, but if we look here, shorts were taking a fair amount of risk around here, and then price just pumped up and killed some of them. You can see here, we had a lot of short risk at 15:35 Eastern and at 15 o'clock. So if we go, coincide with what was happening here, I probably have to go in the 1 minute though. 15:35. Yeah, that was right before the spike. That's actually really unfortunate for these guys. People were taking a lot of risk in the shorts right here at 15:35. When that says 15:35, guys, that means that the data was collected exactly at the timestamp of 15:35. Don't forget that. Okay? So the data was collected at 15:35, which is right here, and then right after those longs were taking a lot of risk, price spikes up, not that much, not really much to write home about. The price spikes up a fair amount, and the risk of shorts goes down, meaning that they might have taken a loss because price went against them. So I feel like this is a really good indicator to show top traders. Do remember that when it comes to top trader volume, meaning the biggest volume on the exchange, that's going to be a mix of professional traders with a lot of money and gambler traders who are getting into this top trader bracket right here because of their leverage, because they might be 100x leverage, and that could be skewing some of this data. But that being said, I mean, this is a really cool indicator to see just how much risk people are taking. Like, you can see just how much risk people were in shorts all today of June 2nd. And if I go in the 1 hour, it didn't really go too well for them. As you can see, price has gone up. Not a lot, but I would expect price to probably keep going up to kill a lot more of these shorts because of how much risk they're taking. When a lot of the longs were taking risk on June 1st, it didn't really go too well for them. You can see all of these sell spikes showing that a lot of them probably got killed all over here. And now it's turned into a market more of hunting shorts. So if you're ever curious of who are we going to hunt today? Is it going to be the shorts getting killed, the longs getting killed, or both? Go look at this indicator right here, the average margin used, and you're going to be off to a great start. With that, happy trading. I was not able to keep this under 7 minutes, but a lot of alpha to give you guys. And if you want even more alpha, check the link in the description below and come talk to me in the Discord. Happy trading.